What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight I wanted to go over with you this beautiful trade that I was able to identify and take on Friday on the NAS 100. All right, Friday was a day with major red news. At 10 o'clock, we had the Federal Chairman Powell's speech at 10 a.m. New York time. All right, so I made sure to not be entering this market just before that news release. All right, I was in moments after the news was released, and I want to go over this trade with you, not to show you how to trade the news, okay? Because a lot of the times, I'll be honest with you, most times I'll just take the day off when we have a major red news release like this, high impact sort of thing. But when we have a well-engineered chart, we have a well-engineered chart, and I'm looking to trade it. And that's what I'm trying to show you today, all right? I have a simple process. I'm looking for the same things. I'm marking up the same levels every time I come to my chart, right? Now, this chart on your screen, we're looking at a 15-minute chart on the NAS 100. We're looking at the backside of the week, Wednesday, day 1, Thursday, day 2, and Friday, day 3, okay? On Wednesday has broken out of Tuesday's low, all right? And I've marked off my high and low from Wednesday's New York session and projected that horizontally across Thursday and Friday, okay? And that's my geometrical rectangle, all right? You can see that on Wednesday we broke out of Tuesday's low and then pulled back inside of the range and closed inside of that range. Then on Thursday, the entire day's price action on Thursday stays inside of that Wednesday high and low range. So we have an inside day on Thursday. I typed this up wrong. Okay, it says Wednesday inside day, but that should say Thursday inside day. All right, and if you look even further, we have most of Friday is still inside of this high and low range until we get to the New York session, all right? But also on Thursday, I marked off New York's high and low and projected that across the chart onto Friday. And the majority of Friday stays inside of that high and low. Here in the London session, we did expand that range a little bit. We had the false break of the inside day to go higher here. But what I'm trying to point out to you with this is that this inside day and then these two sessions, Asia, London, inside of this range, this is a sideways coil, okay? So we have a Wednesday breakout of the low, okay? And we know that when the market breaks out, it can only do one of three things, right? It's either going to break out, pull back, trend, breakout, pull back, and reverse, or like this case, we're going to have a breakout, pull back, and enter a trading range, all right? So that's what we have going on here. We have a coil. That sideways movement, that inside day, that is a coil. That's an area of consolidation, all right? It's very important for me to track these areas of consolidation. What we're looking for essentially is a peak formation high, followed by a peak formation low, and then a consolidation. And most of our trades are going to come out of or after that period of consolidation, all right? Now, when we move to the next slides, we're going to be taking a closer look at this consolidation right here, this sideways coil going into the New York session. You can see here that out of the London session, we've broken the current day's high and then began to coil sideways on top of the current day's high, okay? And that's what I'm going to highlight to you in this next slide, all right? So we have that breakout of the current day's high right here at the end of London, okay? We put in this low with this pullback. We put in these highs. Here's our consolidation area. We can see that price stays inside of this consolidation area all the way until we get to 930, all right? Now, what I'm showing you here is a simple break and retest strategy, all right? We need to see this consolidation, this coil sideways, all right? And then we're waiting to see the market break out. We're not trying to trade the breakout per se, okay? We're not trying to predict, aka guess, which side of this consolidation the breakout is going to occur on, okay? Instead, we're going to let the market break out, because once the market breaks out, we know it can only do one of three things, right? It's going to break out, pull back, continue, or it's going to break out, pull back, and reverse, or it's going to break out, pull back, and enter a trading range yet again, okay? And the reason why we want to be patient, we don't want to try to guess which way this is going to break out and get in early, because 80% of breakouts fail, okay? So if you pay attention here, we can see this is our 930 candle. We spike to the downside, we take out the lows of this consolidation, all right? But immediately we come back inside of the range, trade up, and break out of the other side. So this is a perfect example of a fake out, okay? And this is a very common occurrence on these indexes. I've told you guys before, often we're looking for a spike in one direction for a trade in the opposite direction. This 930 candle, we could call this a stop hunt, all right? We stop hunt back into these London levels. Anyone who was long from London, who's trailing their stops, who still is holding on to those trades, potentially gets stopped out with that 930 candle. Not only that, but when this 930 candle breaks the low here, traders are selling that. They see that initial bam, big spike down, they start selling, and immediately they're taken into drawdown, all right? Now, instead of doing that, if we wait, we see it break out, we see it come this way, then we see it break out this side, and there's a big difference when it breaks out up here than down here. Here we just kind of spike through there, all right, and immediately come back inside of the range. Here up top, we get some proper displacement, all right, some proper displacement, and you can see the pullback continuation, and we're going to take a closer look at this right here, but this is what I want to show you, all right? Now, we already know that we've broken out of the current day's high with these levels, right? Now, when we come to the session and we break out up here, guess what this is? This is our higher high on the inside, okay? We call it that because it's higher than these highs, right? But it still is inside of Wednesday's high and low range. This is our higher high on the inside. That higher high on the inside is the setup for the dump and pump, right? The dump and pump. Now let's take a closer look at this. Here's our 930 candle, the false break of the consolidation. We spike those lows, start climbing up, and then we break out of the top of this consolidation right here, right? So we break out, we get some proper displacement. You can see the difference, right? Not only do we trade further out from that area of consolidation right here than we do down here, we have multiple candles, all right? That's that displacement I was telling you about. So we displace to the upside, put in this little M formation, and then check this out, okay? 950 right here with these pins all going into the highs. From 950 to 958, 959, we dump back down into these breakout levels, okay? We're dumping down just before the news release at 10 o'clock. So we are dumping down into that news release. 959 engulfs the 958 candle, and we open on a gap up for that news release and catapult, okay? And you have to be careful here. I managed to get in somewhere right around here and take this thing up higher, but you got to be careful, especially if you are like me trading on a live account. Sometimes you will not get that entry that you're looking for. There's slippage, there's spread that widens during those news releases. You have to be careful, right? My broker is kind of good with that, right? But it still is like when I hit the button for my market order to be executed, it took, a good 3 to 5 seconds to actually be entered into the market, right? But I was able to take this trade, and I hope that you can see how obvious this is, right? And this is exactly why we do not want to predict or guess which way this breakout is going to go. Instead, we want to wait and let the market show us what it wants to do. And it shows us by breaking out, okay? So once we get that strong breakout to the upside, Here's our pullback, and now we're looking for our buy signal to take this market higher. You understand what I'm saying? It's a break and retest. Be patient. Let the market show its hand, all right? These institutional big dog traders cannot hide their moves forever. You understand? So at some point, the market will give you a tell, and you will be able to execute on that with enough experience. Now, if we go back here, you can see this more clearly, right? Here's our big consolidation. That big consolidation is condensed. We have a very narrow range right here going into that New York session for the squeeze before we're going higher, right? And you can see we came down, just pipped through closing price of Thursday for that big move up, okay? Now, I don't recommend trading on these high-impact news releases, all right? But we do have 2 entry models in the playbook for those news entries, all right? So keep that in mind. But this is a simple break and retest strategy, but it relies on your ability to identify meaningful consolidations, all right? The market's going to move sideways, at different points during the day, all right? But by looking at this consolidation, right? We have this beautiful consolidation on top of the high, just above closing price, right? Going into the New York session. So this is a consolidation that is important for us to pay attention to because it's happening going into that timing window, okay? And we have this clear high and low range, and I'm marking these levels off. These are the extremes, okay? These daily highs and lows, that high and low range, that's our extremes. And I'm looking to either work from those extremes or work to those extremes, meaning I'm either going to be securing my entry at these levels, or these levels will become my target, or it will be both of those. I will use those as an entry or a target. But you can see here, our ideal entry would have been in this London session. When we broke the low of that inside day, there's our fake breakout of the inside day to take it higher, okay? So this would have been our ideal entry. Our New York session offers us a continuation trade from the move that's already happening in London, okay? So this sort of is like a low-hanging fruit trade in New York. So in this case, of course, we could have secured an entry around closing price, but we got in up here somewhere and we're targeting these levels. So while I did not get an entry at one of these extremes, I still have a target at one of these extremes. You understand what I'm saying? So I hope that makes sense for you. I hope it was simple enough and to the point. I hope it made sense. Let me know if there's anything I could do to improve these videos for you in the comments below, all right? But I appreciate y'all being here. I wish you a happy trading week coming up. Let's get prepared. Let's keep our mind right. Let's be patient. Let's know exactly what we're looking for, okay? A peak formation high, peak formation low, consolidation for the break and retest sort of trade, okay? This is as simple as it gets. I wish you all the best of luck, man. I appreciate you. Until next time, I hope you continue to free your mind.